Hey everyone, welcome back to Corporate Decoder, where we unpack the hidden stories in corporate filings. And today we have a fascinating look into Expeditors International of Washington, Incorporated, a logistics giant. And let me tell you, this latest report is a real page turner with some surprising shifts happening behind the scenes. So Expeditors International of Washington Incorporated is a massive player in global logistics, providing a huge range of services from moving goods by air and sea to handling all the nitty-gritty of customs and warehousing. They are essentially the invisible hand that keeps countless supply chains moving, and in this report for the quarter ending the 30th of September 2025, they are showing us how they are navigating a really complex global landscape. Let us dive straight into the numbers, beginning with their balance sheet. As of the 30th of September 2025, the company reported total assets of an impressive $4.78 billion. This is a slight uptick from $4.75 billion at the end of 2024. On the flip side, their total liabilities are around $2.5 billion, with about $2.05 billion in current liabilities. Now, what really stands out here is their shareholders' equity, which sits at a very healthy $2.28 billion. Think of this as the owner's stake in the company, and that number has grown significantly since December 2024. This shows a strong financial foundation. Now, turning our attention to the income statement. For the 3 months ending the 30th of September 2025, net earnings attributable to shareholders were $222.3 million. That is a slight decrease compared to about $229.6 million in the same period of the previous year. For the 9-month period, they saw a nice increase with net earnings at $609.6 million, up from $574.2 million in the prior year. Earnings per S-share for the quarter came in at $1.64, a small increase from $1.63 the previous year. This overall picture shows resilience even with some market headwinds. Let us dig into what is driving those earnings. Total revenues for the third quarter were just under $2.9 billion, down slightly from just over $3 billion earned in the same quarter of 2024. For the 9 months, revenues are up about 7%, reaching just over $8.2 billion compared to about $7.6 billion last year. This growth is interesting because it is coming from a mixed bag of services. Air freight services, for example, saw a 3% revenue increase in the third quarter. This looks like a solid performance, especially considering the overall market. This growth extended to the 9-month period where revenues jumped a healthy 10%. This indicates they are successfully capitalizing on air cargo demand. However, their ocean freight and ocean services, are typically a huge revenue driver, took a significant hit. Revenues dropped a steep 27% in the third quarter and were down 2% for the 9-month period. This is a really big deal. The report points to a drop in average ocean sell rates and buy rates coupled with fewer containers shipped. Apparently, importers were pulling forward shipments earlier in the year to get ahead of potential tariffs. Now that those tariffs have actually materialized and perhaps shifted or changed, it has cooled down that ocean freight demand. This segment is normally a powerhouse for them, so this dip is definitely something to watch. On the brighter side, customs brokerage and other services really shined. Revenues here jumped 13% for the quarter and 12% for the 9-month period. The company mentions that the increasing complexity of trade regulations and the dynamic trade environment have made their brokerage services highly sought after. This is a clear example of how a more complicated global trade landscape can actually benefit a company like our Expeditors. They are acting as a crucial guide through this maze. Now, looking at expenses, salaries and related costs saw a 9% increase for the quarter and a 10% increase for the 9 months. This is largely due to hiring more people, especially in operations and information technology. They needed more hands on deck to handle the growing complexity in customs brokerage and also to support increased volumes in other areas. This investment in people and systems shows they are preparing for future growth and also dealing with the current complexities. This increased spending combined with the revenue shifts led to a slight dip in operating income. For the third quarter, operating income decreased 4%. However, for the 9-month period, it increased about 8%. This shows they are managing their costs and profitability even with these external pressures. They also mention a really interesting compensation philosophy where their managers' bonuses are tied to operating profit, and if a business unit is losing money, managers do not get a bonus until those losses are fully recovered by profits. This creates a strong incentive for profitability and responsible risk-taking. Looking at where their assets are deployed, their identifiable assets at the end of September 2025 were just over $4.77 billion. The United States segment holds the largest portion of those assets at $2.58 billion, followed by Europe at $819 million. The these assets are crucial for their operations, and this breakdown gives us a sense of their global footprint and where they are investing the most. In terms of liquidity, Expeditors had very healthy cash and cash equivalents of $1.19 billion at the end of September 2025. This is up from $1.15 billion at the end of 2024. Their cash flow from operations for the quarter was $201 million, a significant jump from $90 million in the prior year. This strong cash generation is key for their business, especially since they do not own major transportation assets. They mostly facilitate and manage the movement of goods. Let us talk about the shareholders for a moment. For the 9 months ending the 30th of September 2025, they spent $620.7 million buying back their own stock. This is a substantial amount, and it shows a commitment to returning value to shareholders. They also paid out dividends with a semi-annual dividend of $0.7 per share declared in May 2025. These actions demonstrate a company that is financially stable and focused on shareholder returns. Now, for some risks, the company operates globally, so they are exposed to foreign exchange risk. For the 9 months of 2025, they incurred transactional losses of about $20 million due to currency fluctuations. While this is a risk, they do not heavily rely on derivatives to manage this exposure. Instead, they accelerate international currency settlements among their offices. This is a clever way to mitigate some of that risk. Also, the report mentions a hypothetical 10% shift in the US dollar could impact operating income by millions of dollars either way. Here is something that caught my eye. Management concluded that their disclosure controls and procedures were not effective due to material weaknesses in internal control over financial reporting. This is basically saying there were some flaws in how they manage their financial data and prevent errors, especially related to unauthorized access and changes in databases and applications. They have brought in consultants and are implementing new systems to fix this. While they believe their financial statements are still fair, they acknowledge these weaknesses are not fully remediated yet. For a company of this size and importance, keeping financial reporting solid is paramount, so this is a significant area to monitor. The report also highlights the volatile international trade environment. They are facing increased tariffs and trade actions between countries like the US and China. This creates a lot of uncertainty for businesses trying to figure out where to source their goods and how to ship them. Expeditors is exposed to this, with a significant portion of their business tied to exports from China and Hong Kong. The report notes a trend of lower revenues from this region in 2025. The elimination of the low-value de minimis exemption for goods from China has also added complexity to customs brokerage. This whole trade situation is a big unknown and could really impact their volumes and revenues. So what is my take on all this? Expeditors is navigating a really tricky global environment with a lot of success. Their revenue growth on the 9-month basis shows underlying demand for their services, especially in air freight and customs brokerage. The strength in customs brokerage during this period of increasing trade complexity is a smart play and shows they can benefit from global trade disruptions. However, the massive drop in ocean freight revenue is a clear warning sign. The company is trying to offset this by focusing on other services and by investing in their internal systems and people. The material weakness in internal controls is something to watch closely. While they are working to fix it, it does raise some concerns about the robustness of their financial reporting. Overall, Expeditors appears to be a resilient company with a strong financial footing, but they are clearly facing headwinds from global trade tensions and market shifts in ocean freight. They are making smart moves by doubling down on customs brokerage and managing their international operations effectively. Alright, that is our breakdown of Expeditors International of Washington Incorporated's latest filing. What is your take on these numbers, the trade tensions, and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. And remember to check out the Discord community in the description for even more insights and discussions. Thanks for watching, see you next time.